Traders, my name is Grega Horat and welcome to another free video in which I will make a detailed look at the crude oil. As you know, crude oil did not move much for the last year or so. We have been in some kind of a consolidation here after some strong reversal back at the start of 2016. So actually how I see is that crude oil could potentially see higher prices by the end of the year, and the reason is clearly because the first leg up here was very strong, very aggressive, and normally in Elliott wave theory first legs aggressive movements either from a high or from the low will be made in 5 waves, and if you spot a 5-wave movement, then this should be your confirmation that top or bottom has been formed. In our case, we are looking for a bottom in place. As we said, this has a personality of an impulsive wave, and if that's the case, then you know that market should continue to the upside after temporary correction that occurs against that 5-wave movement. So actually we can count here 5 waves up, and then market just made a consolidation. Now some corrections are simple, some are very complex, okay? And definitely what you want to see as a trader is finished corrective pattern before you can either look maybe for trade, for investment, whatever. Okay, so important is to recognize potential end of a correction, and I think that this could be coming here, could be in play here for crude oil based on some overlay charts that I will show you now. Just generally speaking here, it's not really clear if this correction will still continue or we will go now straight to a new high. So I just look normally when something is not clear on one market, like for example here on crude oil, I will take a look at correlated market, maybe at some ETFs, maybe at some commodity index. So actually, firstly, I will show you an overlay chart. Now this is an overlay chart. Commodity index is at the top in blue, and here we have in red we have crude oil. So you can see that actually markets are in pretty tight correlation. Now commodity index is built from a lot of different commodities like sugar, cocoa, corn, and so on, but it has the most weight from crude oil. So that's why I see very tight correlations here. And what I see is that technically speaking, I think that commodity index could actually go to the upside. We also have seen that US dollar value has came to lower pace. So actually, if dollar index will maybe remain under pressure, this should some kind of a support commodities in general. So CRB index, I think, could move to the upside, and commodity energy market, crude oil, should also follow the same path. So actually I will now take a look at, as I said, on crude oil. The structure is not that clear, but I will take a look on count of commodity index, and you will see that there is pretty clear wave count. Okay, so here we have a structure of commodity index. Actually, it's very nice pattern. It appears to be an expanded flat correction. Okay, now this is a 335 pattern, and I will show you this on the next basic. So it's a 335 pattern. Here you can see 3 waves down for a wave A, 3 waves up for a wave B, and then a 5-wave drop into a wave C. So this is a corrective movement. It's a little bit tricky because here traders get confused when market touches or breaks slightly above the start point of wave A, and here the same situation occurs when prices after a drop beneath the wave A also turn into the opposite direction. So actually when you get 2 failed breakouts in this type of a correction, that's why normally a lot of traders will stay on the sideline while a huge move will happen. So actually I think it can be a very important time for this crude oil and commodity markets in general, because we see a potential completion of this pattern. Okay, we can see that prices actually moved nicely towards these wave A levels, and as I know, it spiked slightly beneath that before market turned to the upside. Also previously we can count 5 waves of decline in this wave C, so actually we have all needed pieces of the puzzle here in place that can potentially send these prices to the upside. So I will remain bullish here on this commodity index, which means that actually crude oil could follow the same path. So actually I'm tracking still 2 different wave counts on crude oil. One suggests that we could see more complex pullback, slightly more to the downside than going higher, but the other one suggests that we are already in the first stages of this new leg higher. So let me show you the both of them. First wave count is this one, where I said that we could potentially see more downside here after a completion of wave B. But even if you focus on this wave count, and if you take a look closely here, you still need 3 waves up, okay, in ABC movement. So no matter which count on longer time frame is correct, we think that there is a chance that market will continue and make more gains after this pullback into wave B before we may go lower for wave C to complete this complex correction, double zigzag, okay, that could then bottom around $40 per barrel. Now the second count, which I think it's maybe more important, more interesting when it comes to CRB index, because definitely you want that these markets would match perfectly. So if there was a flat correction, okay, here on CRB index here, then obviously I want and I will label something similar here. We have 3 waves down for wave A, then you have 3 waves up for wave B, and then this can be labeled as an expanding diagonal for wave C. An expanding diagonal, as you know, is a diagonal where wave 4 is very deep and you get an overlay with the wave 1, but still a valid formation, okay, because it's in a 5 wave. And wave C is a motive wave. So actually an overlap in wave C is allowed. And this could fit into a flat correction, which suggests that market might have bottomed here. And this becomes even more interesting because this rally is impulsive, okay? Which means we have 5 waves up. And if you know, earlier I said, when I presented this part of a trend, I said if you have 5 waves up, any 5 wave movement, it should be an alarm that something is changing, okay? So here we have 5 waves up, and also I will show you on the next lower time frame charts, we have 5 waves up here as well. So if we suspect that more upside will follow on a longer scale, then we should think the same, because Elliott waves are fractal on a shorter time scale, okay? So here we go to the 4-hour chart. Actually, because we have 2 wave counts, we don't know. This is wave A as part of this wave B corrective rally, or is it maybe wave 1 as part of this bullish count where new leg might have already started, okay? So we have 5 waves up here for wave A or wave 1, and it appears that we had a wedge pattern here. We were posting an intraday update and notified that there could be a sharp reversal coming. Let me switch to hourly chart so you can see here it was wedge pattern. Now normally these wedge patterns will occur in final stages of a trend because momentum and volume are decreasing, and normally when it picks up, sharp moves occurs in the opposite direction. So this was an indication that we are in some late stages of this recovery. It's time for a pullback for sure, because we have 5 waves up. Now we tested this trend line support, okay, still not broken. Definitely want to see a decisive breakout before we may say that top has been formed here for wave A or wave 1, but nonetheless I think that we will see a corrective pullback in 3 waves. Now ideally, as you know, the pullback will be seen back to the area of a former wave 4. So this was actually here a starting point of wave 4. We have tested this, and here's the end of a wave 4 termination point. So actually I want to see more downside, something more complex, okay? If we are in a correction of a higher degree, definitely expect to to happen something more complex in wave B or wave 2. So I'm looking definitely for a pullback back to this wave 4 zone, and then maybe for a new leg higher, let's say at the start of June. Okay, definitely I will wait a little bit more here and see how this price action unfolds. The important is when you're tracking pullbacks, only corrective price action, that you have personality of a corrections, which means you want to see here in this wave B or wave 2, you want to see slow price movements, okay? Because slow price movements are corrective, okay? If you see any aggressive, strong move, let's say immediate sharp drop back to 46, 45 levels, then definitely this would not fit into a personality of a corrective movement, okay? So before anyone triggers a trade, make sure that you have a personality that fits into corrective wave, and definitely you need to see minimum 3 waves. And for now, from the high, I think we have only one leg, so definitely expect more downside here for a wave B or wave 2. And after this completed pattern, we will again turn bullish for wave 3 or wave C. We don't know that which wave will unfold, because we do not want to predict any wave too far into the future. We need to go step by step, one wave at a time. So actually either we will see a push higher then for a wave C here to complete wave B, or maybe we will see an extended leg higher for wave 3. Okay, so I think that this market could be very, very interesting while we are trading above this. This was above mile 5 low. So I think that any counter-trend reaction to the downside will be temporary and corrective as part of current minimum ongoing 3 waves up. Okay, traders, thank you very much for your attention. If you like our work, please check our website. We have 2 for 1 special offer, which means you get first 2 months for the price of 1. Okay, thank you very much, and I will catch you next time.